Right, hello everyone, welcome to another recap video. So we're going to go over last Thursday and Friday's price action, and we're just going to go over the confirmations, where you should be entering and what you should be looking at really to follow what price is telling you. So these are the pictures. I'll start off with this most of the time. So you got the bullish scenario from the opening, then you got this one if liquidity or key area is taken before, and that's the reversal. That's the bearish one with the opening, and then you got the bearish one before the opening, and then you got these two that sometimes happen when there is a news release. So, but they're used less often. It's mainly these four that are used most days. So that is that. Then we go down. We're going to need that one. So we're going over Thursday the 8th. And Friday the 9th. So we'll leave that one up. Go here. So this is Thursday. We had a bias for a continuation down to follow this downwards move here the day before. And that was quite a strong bias for a continuation down. But obviously you look for, and wait for the confirmations. So we're going to stick to the 5 minute and go straight down. Straight away, London opening. Let's have a look. So you got the pre-London here, London here. Mop, and then you got the previous highs here. Let's call that the Asian session high. It's not the Asian session high because we're going into the London session, but we're going to put these as your high. So the setup here is pre-London, pushes up, takes liquidity. So that gets the London opening ready for a sell bias. So what you'd have is a sell bias back down to this area at least. And then you'd look for potential bullish support from this level for a continuation up. So London opening takes place, gives you that push down. Your entry would be on a retracement. So retracement back up to retest the London opening. It falls just short of there, but then you get into the sell. This would be on the 1 minute time frame, and you'd be looking for a continuation down to target these lows here and here, and move to break even as you hit this pre-London level first. Obviously you get into that sell, so we're gonna put a little box, or let's put a little pink box on. So these is where you would look to enter. So push down, take liquidity from here. Now this would be considered, okay, if we're pushing to a discount price, then we would look to buy from this sort of area because we're taking liquidity. This would be the discounted buy area from the day before, because that took a major low. It took this previous day low and this low. So this is a major swing. So this could be seen as an Asian session discount buy area. Not a strong one, but it could be. So you look at this and watch price. Yeah, we can see that it's starting to hit a bit of resistance. You could have took a chance on a buy from there. So let's just, on one of these candles here, you could look for a buy. Stop loss at the low, obviously, at the lowest point, because you don't expect that to be broken, and you'd be expecting a move to the upside. Now, you could have got on any of these candles. As price goes up, clears the previous high, you would move to break even. So let's say this one is a break even. That one's obviously profit. As it comes down, you take partial profits as it clears the low. The percentage you take is up to you. As price goes up to the pre-London, you'd have took partial profits if you were still in. You might have got taken out at break even on that move. Price comes down again. You may have got into this one again, because this is a discounted price with the Asian session, and then this would be a discounted price for the London session. So if price seems like it's retesting this area, then it could be seen as a retest of a discounted London session area. So you'd have got in probably on this one here or here. But that would have been a later trade. You'd have probably risked less on that one because you'd be waiting for it to continue into the New York session. And apart from that, it's getting late into the session, so you wouldn't really take much other trades. And that is just based on the normal trade templates. So this is session opens, push down, retest, and then continues down. This one here would be session opens, push down to a liquidity pool, then you're looking for to buy and assumes this is a discounted area. And then this one is a bonus one because it's retesting a discounted area. Obviously you wouldn't get all of them, but it's about having that mindset of just seeing that happen on the chart and how they're positioning their positions for the next session. Obviously you can see here it favours a continue to the upside, so you wouldn't have took any other real trades in this area for the London session. You might have took a sell from here if you saw it as retesting this area, but it wouldn't have been a major setup. Then we go into the news. I think this is jobless claim news. Gives a impulse move to the upside with the release. Then you go into trading the New York session. So we look at opportunities within the New York session. Now every day is different. You will get opportunities in one session and then not in a lot in the before session. But on this day, you got main opportunities in a London session and then price moves within the New York session, not giving you much opportunity. So we're going to go down now and we're just going to look into that. So this is the news release, pushes up, takes internal liquidity. So these are not major high liquidities, they're just internal ones from that downwards move. So you'd be looking for a key area within that area as well. A bit like up here is a breaker. So price pushes up. Me myself, I did try and sell here because we left a gap. Price pushed up, took a high. We took the London session high too. So naturally you'd look for price to start reversing here and then a downwards move with the New York session. So this is once you start to see the bearish pressure kick in and then you watch price. I took this trade, got closed at break even because I saw price starting to go up here. And that's not what you want to see. You want to see a nice retest, pressure down, retest, pressure down. You don't want it to be sitting around in that area. So that was break even. Price goes into New York opening here and obviously gives a quick retest of the downwards move and an instant push to the upside. I don't see any trade set up here unless you had a bullish bias and you was willing to buy high and ignore the gap down here. Price pushed up, takes the next area of liquidity, which is this internal high here. So you could have took a sell from here because we start to see a little bit of resistance. Now let's go down to the 1 minute time frame and just look at that. You can see how it took that high, then gave you the downwards move, but you can see how support and resistance ran along here. So by that time, you need to move to break even at least because you're waiting for the structure to be broken. So you're looking for that impulse move down to break the previous lows. So this would have been a nice sell trade. Preferably on this downwards move because you're taking into a small time frame liquidity too. And then by this support and resistance level, you'd have been at break even. So that is a sell setup. Go back to the 5 minute time frame. So you're not really getting much. You're focusing on the New York session. You're expecting high volume, but you're not able to get into the move. And that's where you got to be able to manage yourself and not get emotional and try and overtrade. So price goes up next. Now this is previous day New York session opening here. You can see how price pushes above that and then starts to consolidate within that breaker. We in fact took a few tries on a sell here and that was on the 1 minute and then we stopped after a little while because as you can see here it's running along the New York opening, so it's using that as bullish support. What you want to see is hit a key level, then rejection, and then bearish support structure. You want to be using support and resistance to the downside, new lower lows, all of that sort of stuff. But at this level, each time we took the high, we look for a sell, We was looking for a sell here because we saw this impulse move down, so we was looking for this area to act as bearish support, but we didn't. We just pushed up, took the high again, then we sold from here again, so that's break even, price come up, and then that was it. We went sideways and stayed out. That showed too much bullish support. It's just about knowing when to hold back and let things go. So that would have been the rest of that day. Thursday, you could have took, that's a previous day high, but it's late in the afternoon. If you were still on a chart, obviously you would have sold after taking that previous day high. And the reason for that whole thing, oh no, I won't go into that. So yeah, after taking that previous day high, you would have sold and made a little bit of profit. So even though the market structure and the whole thing was bullish, London traders would have benefited from that, and the New York traders would have tried to trade it, but they would have to hold back and took a few break evens and not benefit from that. And that's the main goal of trading, is being able to manage these break even hits. Like I said here, break even up here, and you might have, let's say you had a stop loss hit here. You have to be able to manage those situations when you're wrong and come away with small losses. Don't overtrade, don't get emotional because you think you're always going to be right. You're not. Now let's go on to Friday. I've been on about that enough. Friday, let's go straight into it. Now there's a lot of price action here, sideways movement, as you can see. So we have the mop up here, pre-London, and then the London opening here. Zoom in a bit. London opening takes place. There's not really much to go on here. No previous highs. The mop got retested, so you might have got that downwards move. Would have been taken out break even, bouncing along there. Now this is the London opening. So this would have been the clearest one, I'd have said. If you was trying to find a trade, the retest of the London opening here would have probably been your clearest one, because this would be your discounted London session and you're retesting that London opening. So the buys from here would have been the most sense, but they wouldn't have given you much profit. As price goes up, obviously you clear the highs, you take partial profits. As it clears the internal liquidity, you move to break even. So both of these upwards movements would have resulted in small profit. Now, you haven't labelled it up here actually. You may have took a sell from here. And that's because that's the Asian session high. So yeah, you could have got into a sell from here, but it was quick. And then you could have got into a sell from here as well. So they are both trades, but these are very small moves. So you might have just skipped these ones and waited for the New York session. We're going to leave it there. So these templates are London session opens, pushes up, retest, and continues to the upside. There are many templates within that price action that could have been followed. Either way, you still have to follow the main rules. When price starts reversing, it shows you that structure of a reversal. You can get in using the previous high or low as your stop loss. Then you take partials at the next liquidity pool and move to break even as it clears internal liquidity or hits a key level. Now the main trade on this is the New York opening, which is here. London session pushes all the way down. New York opening takes place here, pushes down, takes liquidity from here, retests that previous New York opening, which is here, the blue line, then gives you that bullish support. So once you see rejection from this area, you can get into the buy. Obviously, as it goes up to here, you move to break even and let it run. That would have been the only successful thing there. You might have got a few stop loss hits in here if you didn't think about what's going on. But you wouldn't really took that because you had a lot of liquidity up here and it was pushing down like it was pushing down to bounce of a key level. So when you get this kind of price action, you're pushing down, which is normally a fake out, and then you get the New York traders come in, they get into the move, and that's when you get the true move. Obviously, most partial profits would have been taken up here at your previous high here, and this was, I think, previous day high. No, this was the London, the Monday's high. That's it. Got that wrong. So that would have been your main area. Let's say you got into that move first because it closed the gap too. So this line here was the gap. This was Monday's high. So this push up closed the gap, took the liquidity from Monday's high. Then you could have seen that as a downwards move back to the London opening. Well, New York opening, I mean. So they were the two main moves within that price action. Now we go on to today. You can see price, the London session is still bullish. Again, London session takes place, pushes up, retests a few times, and we retest them up. So this is very bullish for US30, depending on where you got into the move. So we're likely to take the previous day high here, or we might even see a reversal here because it is a discounted area. This is a discounted area, and this is showing you signs of reversal. So we can go down from here with the New York opening if price wants to. But overall, I would see that as an area to watch out for bearish pressure. Hopefully that helps and shows you how you look at both days. Obviously, you don't try and take all of it. I mainly focus on the London session for a few hours, then look at the New York opening availability, which is less time than the London session. But yeah, it's up to you how your life fits around your trading. Message me if you've got any questions, links below. Take care, have a good day.